All right, good morning, guys. How's everybody doing this morning?
Good, good, good.
Good morning.
Good
Doing great.
morning.
Doing great.
All
Doing
right,
great.
we're gonna go ahead and get started. So this morning we're gonna talk about writing good business and keeping business on the books. So does anybody know, somebody who's new, not somebody who's been here, does anybody know what persistency is? The newer people.
Showing up, being accountable.
No, man, we're talking about good writing good business.
All right, a good business.
Persistency. Sabrina?
Is it the number? So there's an equation. So it's the number of policies that are taken or actually active versus the ones that have fallen off the book plus one or something like that.
So yeah, so persistency, guys. I don't know. I wasn't looking for the exact definition, Sabrina, but persistency is how many of your policies are staying on the books, right? So the insurance companies are looking to see if you have good persistency. Mr. Omaha recently sent, and it's a percentage, right? Anybody know, and y'all probably heard me say this, what percentage of policies are not going to stay on the books for the first 9 months?
30%.
30% are going to fall off, right? So if you write 10 policies, three of those policies are not going to stay on the books for the full year, for the full 9 months. Does that make sense? So the insurance companies look at persistency and they say that you're writing good business or you're writing bad business. So, and each insurance carrier has a different persistency number. So would you say if I'm writing, if 60% of my stuff is falling off the books, if I have a 45% persistency, how am I doing with keeping my business on the books, guys?
Not good.
Somebody else besides Mark.
Not too good.
All right. Not too good, or I'm doing really bad.
Sounds bad.
Bad.
It's bad because the standard is 70%. Do you guys also understand that if you're writing business that does not stay on the book, so if your number goes, again, it depends on the insurance company, and you guys need to figure out what it is for each insurance carrier. But do you understand that the insurance companies can terminate you for having bad persistency? Is that right, Corinne?
Oh, wow.
Yeah.
Yeah, that's why we're having this meeting. So, so if you're writing, if your persistency is too low, the insurance companies are going to say, "Hey guys, hey, boy, girl, whoever, Mr. and Mrs. You're not boy, girl, Mr. and Mrs. If your if your business is not staying on the books, we're going to let you go because you're a risk to us and you're a risk to your upline as well." Everybody knows what a chargeback is, right?
Oh, yeah.
Yeah. Yes.
Somebody who's not been here that long, let me see.
I know what a chargeback is.
All right, hold on.
I don't
Dario,
know what it is.
give me just a second. Dario, what's a chargeback?
Is when the the client doesn't pay the premium, so you have to pay it.
Okay. What's a better explanation of that? That is what it is, but what's a better explanation?
I mean, well, I would say like when they cancel the policy, the insurance company still you basically made a deal with the contract that the premium is going to be paid no matter what. So like if it doesn't come out the client's pocket, it has to come out of your pocket.
So guys, write this down if you don't know what a chargeback is. Most of the insurance carriers, they pay us for the first 9 months. Everybody knows that, right? That's why we get paid the way we get paid. So that most insurance companies pay us upfront for 9 months. If the client cancels their policy within the first, and they're paying us after how many payments has the client made?
One.
After one payment. So the client makes one payment, the insurance company are paying us 9. So if the client cancels their insurance policy within the first 9 months, that means that you now owe the insurance company money, right? Everybody clear on that part?
Yes.
And so then who's responsible for paying that money back?
We are.
We are.
Yeah.
And then if you don't, if you let that money sit, if you let that chargeback sit, who's responsible for paying that money back?
Your upline.
You, your upline, you.
And how you think that's gonna work out?
Not good.
Not gonna be a happy day.
It's gonna be worse than a happy day, a bad day. Because now you made this money off of this policy and your upline has to pay this money back. So here's the deal. So when you write, so the reason I'm having this meeting is because what I've been seeing lately is a lot of people are writing policies out of desperation. You're desperate to get a sale, and so you're writing the policy just to say you wrote a policy. And do you think that's good business or you think that's bad business?
That's bad business.
That's
Bad.
business.
Bad
Bad
business.
business.
Bad
Bad
business.
business.
Bad.
Why is that why is that bad business?
There's a business you never want to operate out of desperation. But worse
Like
that
stealing,
you're.
really.
One
It's like
person at a
stealing
time,
in
guys.
an
Go ahead,
essence.
Kamar.
I said you never want to operate out of desperation. Period.
Period. What else is somebody gonna say?
It's like stealing. Like when you
It's
really look
it's,
at it, it's like
it's
stealing. You
like
know
a,
that there's a way that you can get money. You desperate to get the money. You write the policy to get it with no intention on managing the business. So it's like stealing.
but it's almost like a planned or an expected chargeback.
That's good, Mark. That's good. So so what's some examples? Can somebody give me some examples of right when it would be like bad business, when it could potentially be a chargeback, where it seems kind of desperate?
Oh, I got one. I had one over the weekend
Okay,
where somebody says, "Well, I don't really have the money, but I'll try it out."
that's a good one.
And I said, "Well, why don't we wait?" Because I knew I haven't been doing this that long, but I could see that coming. So I said, "Well, why don't we wait? And I'll call you later on in the summer."
Okay, that's good. What else, guys? Good job, Mark.
So this one may be a little different, but I'm learning this through experience. So sometimes, we're under pressure. I'll speak for me. I'm under pressure when a client has all these ailments and stuff, and even if we're using the toolkit and things like that to come up with the best solution for them, right? The toolkit may not display everything that's available to them, their options. So my first mind is, okay, go to Corebridge because they're going to get a guarantee issue policy. But me learning recently, Mutual Omaha may offer them also guaranteed as well, which their policy, their premium is going to be less. So now if I write Corebridge and the person is paying $25, $30 more, somebody's going to double back behind me and now offer them Mutual Omaha. And now this person's going to cancel. And now I'll get a chargeback with them. And it's not that they didn't want the policy, but somebody found something cheaper. So this is a realistic thing that happens as well. It's not so much that everybody's writing bad business. I think that we need to take the time and do the work and really educate ourselves in our back office, learn more about the products, who has what, and that way we can avoid those type of situations from happening. And I'm speaking for me.
That's true, but no, some people are writing bad. Some people are not. Some people are writing business knowing, based on what the client is saying, this is
Right.
what we're going to charge back.
Okay.
So I'm very clear on that.
Mm-hmm.
Because it is, like guys, a lot of people are in this business. You guys are living paycheck to paycheck, and I mean, I can go for hours about why people are doing that way. But this business requires consistency. This is not something that you can do unless you got a full-time job. If you're full-time, this requires that you are here just like if you had a full-time job. You are here working for at least 8 hours a day, 5 days a week. And most of you that are saying they're full-time, you're full-time. FOOL. You're fooling yourself because you're not fooling anybody else into thinking you're full-time in this business. And the people those are most likely the people that operate out of desperation are the people that are kind of, I'm gonna do this today. I don't want to do this tomorrow. And you're fooling yourself into thinking you're full-time in this business. Is that right, Akil? And Akil, I'm not calling on you because
Yes.
Akil's been doing this business for a while, for a long time. So, and the reason I call him Akil because Akil, even though Akil's not here on a full-time basis, Akil, if he's going to help me out with training, Akil does an excellent job with managing his book of business. I don't have to worry about with Akil a chargeback rolling up to me. I don't have to worry about Akil's persistency going down. Akil manages his business, and if a client's policy falls off the books, he is not just letting them slide, right? And so he's also making sure that he's writing good business up front so that the business stays on the books. Guys, when somebody charges you back, you should be upset because that's your money. They're taking money out of your pocket. They're taking money out of your household, right? So, okay, so give me 2 more examples of what could be like desperation, writing business in desperation.
I don't have a bank account.
Not you, Akil.
Somebody tells you that they don't have any income, they don't have a job, they're saying that in the beginning. Don't try to write the policy. They're not going to be able to pay for it.
They telling you what it is. Why would you write a policy? Oh, I have no job. I don't know. I might be interested. I might not. Here's another good example, guys. If you're writing policies on people that is under $50 on grown people, that policy is going to charge back. Be clear. If somebody says to you, I want the cheapest policy, that's not your client. Let them go find somebody else who they can write the cheapest policy on. If they're a grown think about this. You're a grown 50, 40, 50, 60-year-old man, woman, and you don't want to spend $50 a month on life insurance. That's $12.50 a week. Like, let's be clear. That people buy cigarettes and it's more than that for a pack, or that's a pack of cigarettes, right? They don't want to spend $50 to make sure that their loved one is taken care of in the event of their death. They'll spend more than that on their cell phone bill, right? So if it comes down to them keeping that policy or them keeping that cell phone on, what they're going to choose?
Life insurance.
Keeping your cell phone.
Not life insurance. They're going to choose that
No, I
cell
said
phone
their
bill.
life insurance is going to be gone.
Yeah, the life insurance, they're going to let their life insurance go. It is not a priority to them. If they're saying, I want the cheapest, I want the one, I want the one, my budget is $35 a month. Okay, I'm sorry, I don't have any, and just say, hey, I don't have any policies that are that inexpensive. Let another agent will write them, but it should not be anybody on this squad, because that policy for sure is going to charge back. So I'm gonna go through some things that are causing desperation, right? So Mark, if I have 2 policies that I wrote with Mutual of Omaha, and one of those policies canceled, what is my persistency?
50%.
50%. And so then if I go and I write that client with Americo because I want to get paid again, does that help my persistency with Mutual of Omaha?
Nope.
Is my
Because it's
persistency still at 50%?
Right. In their eyes, it's still 50%.
And not in their eyes, in everybody's eyes, it's still 50%. Guys, you should be so if a policy, so write this down. If a
And you owe
policy,
the money.
hold on, Mark. If a policy lapses, you should be rewriting that policy. If it's your policy that lapsed, you should be trying to get that client back on the books. Not rewriting them. Trying to get them back on the books. Sometimes people, something happened where the money just doesn't go through. Something something went wrong, right? Sometimes I'm very guilty, right, Zakira, of putting the wrong bank account number on. And so it's a chart, and it's not because the client didn't have the money. I put instead of at the end of the bank account 50, I put 05, and it's a chargeback. Guys, we gotta put those policies back on the books with the carriers that we wrote the original business with. We should not be rewriting policy with another carrier that is your client because you want to get paid again. Because you still owe that insurance company money. And so the likelihood of, if you're doing this kind of stuff, eventually, guys, you're writing bad business, you're creating bad business habits. And guess what? These are the people that eventually roll debt to their upline because you're not managing your business.
I have a question. Good
Yes,
morning.
ma'am.
So I had a gentleman a couple of months ago who wanted a policy, but when it was time to pay, um, he didn't have the funds because he was using one of those cards. And so
Hold on, back up. What's one of those cards?
the where his social security goes to the card, is
Direct
that a
Express?
what did you just say?
Direct Express?
Yeah, like a direct express card. And so apparently he had taken the money off. That policy never went through. So he wanted to put it back through and he promised that it was going to be on, but I didn't trust him because if you took the money off the first time, so as long as I wasn't paid, does that mean that that wasn't a chargeback? Because I never received any
It's
money.
not, remember, we're talking about two things. We're talking about chargebacks and we're talking about writing good business, persistency, right? So that,
Right.
even though that was not a chargeback, that counts against you as persistency. Here's something else,
Oh,
guys, real quick. I'm glad you brought that up, Sanita. Mutual of Omaha. If you see that when you get to that first part where it says favorable, or where it says, or if it gives you an orange box and it says not favorable, if you run that client through and it ends up getting declined with Mutual of Omaha, that counts against you. If it says not favorable and you keep going, you should, when you see not favorable, you should bet, hey, listen, this is probably not going to be the best fit for you. You need to go and look at another carrier. It counts against you when you try to keep going in that policy and they get declined at the end because they're telling you this is probably not a good idea.
So I
And
have
you keep
a
going.
question with that.
Give me
With
a second, Adina.
I'm sorry.
And you're probably you want to just stop there and find another company. What's your question, Adina?
So when you're in the midst of going through the application with Mutual, you're processing a client, and then you get stuck on the signatures and things like that, and then the cart becomes abandoned. That's a strike against you as well?
Say that again.
Like if your cart is abandoned, like I wrote clients up and it's like we didn't get to the checking and routing information, so it just sits there and then it times out like abandoned. Does that strike against you?
That's a good question. I'll find that out.
No, it doesn't. They don't do that anymore.
Okay.
I have a question.
Yes.
Do all the carriers do that?
No.
Favorable, favorable?
Americo does well. Americo tells you whether that Americo tells you after you put the first part of the information in whether it's good or bad. But Americo, I don't. So now I'm confused because Americo's going to tell you if they're declined, if they're graded, if they're what they actually qualify for.
So I have another question. So with Americo, they share with me that like a client that I wrote up, I found out she went through favorable, whatever, have you approved. And then they told me later on in the week that she's going to be applied as earned. And reason being is because she previously had a policy with them that had lapsed in the past. So I'm unaware of that in the beginning. So is
That
that
doesn't count against you, no.
okay? That's what I want to know.
But I'm gonna use that example, Adina. And can I use you as an example with that
That's fine.
policy?
Yeah, that's fine.
So that policy, I don't like, I know that you were getting feedback. And so here's something else, guys. If you're getting feedback and coaching, you got to listen to the people that have done this before you. So you got feedback and coaching about lowering that policy amount, did you not?
Well, that's for a second amount, but the first one went through. We talking about the first one.
Well, from what I understand, you got feedback to put to bring the policy. You guys, you want to err on the side of lowering the policy versus raising the policy. I had a guy on Saturday, 20,000 was 202, 15,000 was 152, and 10,000 was 102. Okay. So he was like, I think so. I'm gonna give y'all an example. I think I could do the 202. Should I move forward with the 202? Why not, Dario?
The uncertainty in his response basically gave you the answer right there.
So if he's saying, I think I can, guys, give him a lower option. And he said, he was like, I said, well, the 15,000 was 152.55. And he was like, well, he's like, but I really need 20,000. I said, the 20,000 is 202.40. Can you afford that no matter what, Mr. Jones? No matter if the car breaks down, the refrigerator's not working, it's birthdays, it's holidays, no matter what's going on, can you afford the 202? I said, I think I said, let's look at the 15,000. He was like, let's go with the 15,000. So most people are going to choose the number in the middle. That's just psychology. They're going to choose the number in the middle. Here's another like trick or just a pro tip. If you give them 3 options and they choose the lowest option, they cannot afford it. So if I said 20,000 is 200, 15,000 is 150, 10,000 is 100, and they say I want the 10,000, I'm going to go lower. Well, let's take a look at 8,000. Let's see what 8,000 is. Let's see what 5,000 is. And then if they insist, oh, no, I can do the 10,000. Are you sure, Mr. Jones, no matter what happens throughout the year, you're going to be able to come up with that $100 a month? Because this is important, like you told me. Right? So that uncertainty, we got to be listening to what the clients, because they're telling us a lot of times what they can do and what they can't do. And we're just like, I just want this policy because I need the money. The way you get out of desperation mode, guys, is you show up here consistently. You write business on a consistent basis. Because now, Mark, if you have that chargeback with Mutual of Omaha, you write 2 policies, you had that chargeback, you can't get one of those policies back on the books. You write another policy, you're taking care of the chargeback, and you're putting yourself back in a positive persistency. But we're writing a policy with Mutual of Omaha, we're writing a policy with Americo, we're writing a policy with American Amicable, and that one policy charges back and you're nowhere to be found, or you're not doing consistently. Now your persistency is a 0. Does that make sense, guys?
Yes.
Yeah. Let's see. Okay, yeah. So that, I mean, that was the other, like I said, making sure that the client can afford the policy. And then also, like I said, taking the feedback that you're getting from the people on the live dial saying, no, don't do this, or yes, do this, or move forward. Like, guys, we got to listen to the people that have been here before. And then here's another thing that you don't know and don't understand is that your bad persistency affects your manager's persistency. I got to have a meeting with Americo because there was a team that was here that wrote all of this bad business, a bunch of $50 and below policies, and now the team with Americo is at a 40% persistency. And so it's not just affecting you, it's affecting the people around you. And when another manager had the same issue where their downline was writing a bunch of bad persistency business, the manager got terminated from the carrier. So guys, it's not just affecting you when you're not managing your book of business, it affects, and not just the manager and the entire downline everybody got terminated. So if you don't write good business, Kamar, you're not just affecting me, you're not just affecting you, you're affecting me, and you're affecting everybody else on the team. So it's bigger than just, I just got to get paid, because again, you're not even really getting paid because you're managing, you're playing, I don't know football. You're playing offense or defense. Somebody help me, one of the guys.
Depends on what you're doing. Yeah.
So if you're right, if both. Huh?
So you can play both offense and defense.
Yeah.
But if you're not writing good business, I mean, I'm gonna leave that as that because I don't know what I'm talking about. What's up, David? What you gonna say?
I'm not sure if everybody's using the financial inventory sheet. Because before I write any business, I make sure I do a thorough financial inventory before I write any business to see if they're saving money or if they have enough.
That's on the script.
Okay.
Yeah.
I think if everybody's doing that.
But everybody's not writing value wells either, David. Some people are writing final expense, so it's a different process.
Copy.
Okay. Vernell said, when is the persistency
Good
period
question.
over? Hold on. When is the and if when where if they cancel it no longer results in a chargeback. So if they can't, so it depends on the carrier, right? The Core Bridge guaranteed issue only advances us 6 months, and that's another thing I want to say to Adina. You said you're writing Core Bridge because you're just getting frustrated. They got all these health issues, so you're going to write the Core Bridge. So that's a great example. You write Core Bridge, and they could have qualified for something else. I'm gonna come in, not me personally, but another agent like me is gonna say, why you got that guaranteed issue? I can get you something immediate. They're gonna cancel that policy quickly, right? But Burnell Core Bridge is a 6 months advance. And here's the other thing too: you're writing out of desperation with Core Bridge. They pay the least amount of money. They pay the 6 months advance, and they don't pay you they pay you if you're at 80% commission. I think they pay you at a 50% or something like that.
I learned through trial and error.
Yeah.
That's why I shared my experience. I learned through trial and error.
And
So who would
so,
you go to for graded policies for guaranteed issue?
so Core Bridges, if it's guaranteed issue, is Core Bridge. And but Mutual of Omaha also will grade somebody depending on the health issue. But it's still like you're still not any guaranteed issue policy graded. You're going to get paid like a very small percentage. I think Ethos
Isn't Americo and
E-
True Stage
they're a
have
bit
guaranteed
expensive,
issue?
David.
I'm sorry.
Ethos pays you at a 5%. I think, isn't that right, Sabrina?
2.5.
2.5.
Right.
You'll never
Trial
get
and
me
error,
again.
2.5%. So I don't care if it's a $20,000 policy, you're gonna get like $10.
They got a whole chart, and I be mad as I don't know what, trying to go
That's
somewhere
why
else. They got a
Ethos is
whole
our
chart
very
to tell
last
you.
carrier, guys. So this is another thing. Ethos is the very last carrier that we should be looking at. Like that should be your very, very, very last resort, not just because of the pay, but even with True Stage, right? If you write a policy, not immediate coverage, True Stage, right? You cannot, as the agent, you cannot call True Stage and get any information. You cannot do anything for the client. The client has to be present at all times. I had a policy that I wrote on myself with True Stage, and I had Zakira calling to get some information for me about the policy. She could not get any information about the policy from me. I had to, as a client, call them and take care of the questions that I had. She could not do anything for me. You, as the agent, cannot help your client with a policy with True Stage with anything. So once it gets approved and gets to True Stage, they have to call, they have to do all the work. And most of the time, the chance of the client doing that are slim to none, especially if it's a chargeback. You can't even call to find out why the client charged back. If it's because their policy, you don't know. The client has to take care of it. So Ethos, guys, is the very, very, very last option. It's easy to write and all those things, but make sure you use that because nothing else is going through, nothing else is working. Then let me try Ethos. Okay, everybody clear on that? The percentage period. So the insurance companies, Burnell, are looking at the first year. Because when you write that policy, you're saying, I'm vouching for this client, and I've done my part to make sure that they can afford it, to make sure they're going to stay on the books. That's why they're trusting you with 9 months of payments and saying, hey, this is what, we're going to trust you that you're not going anywhere and the client's not going anywhere. Make sense?
Makes sense.
The order carrier for guaranteed issue, I mean, it's not an order carrier for guaranteed issue. If Mutual Omaha will take them graded Mutual Omaha is not guaranteed issue. There's one guaranteed issue company that we use, which is corporate. Guaranteed issue means they don't ask any questions. Graded and guaranteed issue are two different things. So there's one company. So somebody got HIV, they got current cancer, and it's past stage 2. It is Core Bridge, guaranteed issue. Guaranteed issue and graded are two completely different things. Graded means they have some health issues. The insurance company's going to take a chance, but there's no order carriers for guaranteed issue. Akil, I want you to come in real quick. We got a few more minutes and just talk about how to I'm glad you guys are here because You're not going to get this information on a Monday night training call. You're probably not going to go on YouTube and find this in the FFL. Like, guys, that's why I said this is important. Everybody should be taking notes. Everybody should be paying attention, because you're not going to get this type of information. We're talking about sales and how to sell, but we also need to talk about and understand how to manage what we sold. So Akil is, like I said, Akil is really, really good at managing his book of business. He's good at following with his clients. His persistency is really good. So Akil, take a couple minutes and talk about what people need to do to manage their book of business.
Okay. Good morning, everybody. All right.
Good morning.
So one of the first things that you got to do to manage your business is your thought process has to change when it comes down to life insurance. And here, I know everybody talk about you being a business owner, but you really got to think about this business in a perspective as you are a business owner, right? And so with business owner, you got to understand that you always have to be profitable, right? And so one of the first things that we do when it comes down to managing your business is we understand that when we sell a life insurance policy and a company pays you, advance you 75% up front, you understand I'm supposed to get all 12 months. Okay, all 12 months. So that's the way your thought process have to be. Okay, so I'm just going to give an example. So let's just say if you're on a 100% contract, because we're going to do this mathematics very simple. You do a $100 life insurance policy, right? 100 times 12 is 1,200. Your 100% contract, which means your total commission is 1,200. But the insurance company advance you $900 up front because that's 9 months payments, right? So what happens is, what some people do is they don't have a problem with getting 9 months, $900, the client making 6 months payments, and then the client charges you back. And then you say, well, you know what I'm going to do with the client? I'm going to take them to another carrier, and they charge back $300, right? People do that all the time. But your thought process have to be is that if it charged back, I'm supposed to got $1,200, right? Because if we in business, you're supposed to get paid $1,200. I want my all $1,200. So the first thing that you got to do, and I'm just going to use Mutual Omaha as an example, is when a person payment do not clear, Mutual Omaha going to send you an email. America will send you an email. All the companies send you an email, and they say that this person payment didn't clear. And most of the time they send it to you 2, 3, 4, 5, 6 in the morning. So as soon as you wake up, you got the email saying a person payment didn't clear. And as soon as you get the email, what I do is I call Mutual Omaha first. And I call them and I say, okay, this person payment didn't clear. What happened? And the Mutual Omaha will say, hey, the bank account came closed, insufficient funds, or maybe the client terminated the policy. And so the reason you want to know that is because after that happens, you want to call the client. And when you call the client, you say, hey, I'm just following up with you. And these are some examples I may say as a follow-up. Hey, how you doing? I'm just following up with you. Your payment didn't clear for the life insurance. I'm pretty sure you didn't know. You probably changed accounts. And then the client going to tell you, oh, I did change account. Oops, I didn't put the money in my checking account. And they're going to give you all excuses, or they're going to tell you exactly what happened. And then at that point, you could do two things. This is what I like to do. So at that point, when they say, you know what, I forgot to transfer the money, or open up a new account, or blah, 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 right? And this is the 6th month. I said, well, what we're going to do is I'm going to call Mutual Omaha. We're going to put them on the 3-way. And what we're going to have them do is we're going to have them, you're going to use your debit card to make that payment right now, right? And when you do that, what happens is right now for the debit card, they make the payment. And then we go ahead and put them back on bank draft. You see what I'm saying? We do it just like that. Now, some clients may say, well, you know what? Have them redraft my account. And sometimes that works, and sometimes they say it because they don't have the money, right? Or they run into some financial issues. Now, I do that sometimes, but I find that if we just use the debit card and then put them back on bank draft, that works, okay? So now we get them back on there. You get we get them to where you get your 9 months, your $900. The next month, Mutual Omaha, most companies, when that client make that $100 bill, you get a earns. And the next month they do that, you get another earns. right? And so I want all 12 months. So I just want you to think about this. If you Dunkin' Donuts, you Amazon, you Target, right? Every company has accounts receivable department. And because it's just you, you got to be accounts receivable. When you sell a product, you must get paid on all your product, right? Does that make sense? Right. So when you do somebody's life insurance and the first payment don't clear, right? Again, Mutual Omaha send you a email, and all the companies send emails, David, and they say, hey, the payment didn't clear. And then you got to go and call that company, and you got to find out what happened. You got to do the exact same thing I just said to you again to make sure that payment goes through, right? And I found out if you fix it from the beginning, you will have a lot less problems. Every company has a back office, just in case you don't know. I'm gonna use Mutual Omaha. Mutual Omaha, when you go to the home screen on the left-hand side, right above where it says quotes, it says what's that word it say right there?
Conservation
Tally?
event.
Yep. I got it right there. And if you look on that, if you hit that, it'll tell you every policy, money didn't go through. When you pull it up, it actually will tell you another thing. When we talk about keeping your money, if you use the conservation, use the conservation to tell you, you can actually pull it up and it will tell you when you actually wrote the life insurance. So you can actually see where I got 6 months in, I got 9 months in, I got 11 months in. Some people, even when they get 11 months in and it lapses, they say, hey, they go write it. No, I want all my 12 months of payments, right? I want it all. Okay. So it have it right there. So because every company has an accounts receivable and you have to be the accounts receivable, if you're writing a lot of life insurance and you're not writing a lot of life insurance, you need to put some time aside, maybe an hour a day, maybe an hour every other day. But typically, Monday definitely, and then sometime around Wednesday, Thursday, you should be checking, because sometimes we be looking for commission, and sometimes we be looking for commission and we find out we got a charge back, right? But every company has things a little different. But if you just sitting an hour to the side and then figuring out what's going on, did this money go through? The money didn't go through. You'll know a chargeback is about to come, which creates bad persistency, bad quality of business, and you can actually stop it. Anybody got any questions?
I have one. Speaking with Mutual, so they sent me an email this morning. There's a client who he wanted to draft for the 14th, but his bank account information is not being found. So I reached out to the client multiple times. I left a voicemail, I left a text message. They're not responding. So it's set to cancel out on the 25th if he doesn't make any changes. So that strikes against me.
Is this a brand new policy?
This is a new policy.
And it's already issued?
Well, they haven't received his first premium.
Okay.
So they say only because they can't, it's something with the bank account. Maybe a number's missing or something's not correct. And then when I verified, before I put everything through, everything was correct. But now they're saying something's wrong with the account. So I'm asking him, okay, hey, let's update it. We need to make any adjustments, any changes or anything like that. But it's crickets right now.
It's crickets?
Yep.
You're going to have to continue to keep calling them. You might need to call them from another number. And you need to do the *67 to call them. But when you do get in contact with them, you got to be extremely direct with the guy. So you got to, when you answer the phone from a different number, you got to say, hey, I've been calling you. Your banking, the account information isn't accurate, and we need to update that right now. And he may say yes or no, and then you need to say, I was calling you, I left you a text message. Did you get my text message? And you got to really ask him the question, because you need to find out what type of customer you're dealing with, because you might find out there's somebody who may not make a payment, and you got to be calling the person like you're a bill collector. You're not a bill collector, to make sure you get all your 12-month payments in, right? And so that's something that you won't have to do just like that. And I would add, I'm not a bill collector. So when you talk to them, hey, whatever, I'm not a bill collector. I'm just trying to make sure the life insurance that you want, do you want it or you don't want it? Because at this time, it don't hurt you either way if he's been ducking you out. But you need to be extremely direct.
You're saying it doesn't hurt, but if we're writing business and it's not going through, is it striking against us?
Yes, but I'm talking about not hurting you, being direct with him
like a
when you
charge
get in
back.
contact with him.
Okay.
Because if he been ducking you out, you need to be very direct with him.
Mm-hmm.
I have a question.
Let me add one thing real quick that I just thought about too. As far as writing stuff out of desperation, it's because David mentioned about the debit card. So, guys, the best thing to do is to get in most situations, well, in every situation that you can, is to get routing and account number, because people routing an account number, that doesn't change. But people can, somebody was scamming my card, somebody was charging my account. I changed my credit card number. I changed my debit card number, right? So if you can use a debit card, a routing and account number, that is the best course of business. And even with the direct, but with the Direct Express card, right? Outside of Adina's example, if you got somebody who was on Social Security and they have their money going to Direct Express, you want to find out when their payment comes in. Because if you set it up, because one of the questions in the application, so Transamerica, do you want this to be in line with their Social Security payment? And if you say yes, they're going to take the money out as soon as that money gets in there on that date. But if you just date it on, like, if you just say the 3rd and you don't say I wanted to align with their Social Security payment, then it's going to just come out like a regular card. The other thing you want to stay away from, Cash App has a routing and account number. Don't do that. If they got a Cash App, that's not a real account number, guys. So with Cash App, everybody's clear. You got to put money on that Cash App card or on that Cash App account for the money to be there. If somebody's saying all I got is a Cash App card or Cash App account number, that's not good business. Same thing with those other prepaid accounts. A lot of carriers won't even take those type of payments. And even though Mutual of Omaha will take Cash App routing account number, initially it's going to kick back and say, no, we're not going to take this. So it'll accept it at the beginning, but it's going to say on the back end, no, they're not going to take that kind of card, that type of bank, because it's not a bank account, y'all. Like, be clear. Chime isn't, listen, people have Chime. I had a Chime account when I first got the FFL because I had messed up all my other bank accounts, right? Because I bounced so many things. I had so many. So Chime is a last chance bank account because they can't get approved with any other bank. That's why people have Chime. So be clear when somebody say they got a Chime account, that means they don't pay their bills. So, and all these little things, all these little things are telling you if this is a client that I want to write or this is a client that I don't want to write. Everybody is not your client, and you got to be okay with saying, no, this is not going to work out, because it's not going to work out in the long run. All right, Akil, I just wanted to add that real quick. I thought about that.
I got a question.
What was your question, David? Somebody said they had a question.
I said I had a question.
Oh, Mark. Okay.
How do I recognize? Like, what I want to do is I want to know that I'm making it easy for them to make a payment. So, what is the ratio? Like when they say I'm still working, or I'm not working, or I'm disabled, or I'm collecting whatever. How like when you take a mortgage loan, the bank looks at your full equity, and they will loan you a portion of your home's value based with the equity. So they leave a buffer so that you're not taking out full value. How do I know, like when I say, how much money at the end of the month is left over? And they say $100. And we're looking at $100 policy, per month. I don't want to take their last dollar because, again,
that's a good point, Mark.
What's that?
So in the script, yeah. So in the script, that's why we asked that question, right?
But how do I know the percentage? What's left over?
We're not worried about. We can't worry about that. But if
Okay.
somebody says they got $100 left over at the end of the month, That's why we asked that early on in the script. Is if they so how are you going to afford this policy, Mr. Hellwig? That I mean, that's where you want to ask that question. Like, if you only have $100 left over, and most of the time when they say whatever money they have left over, they lying about that.
Yep.
Like, especially the men. I got 1,500, I got 1,000, and then when come down to the policy, you say $100 a month. They're like, ooh. So they're not even telling the truth about it. So if they're saying they got $100 left over at the end of the month, we need to address that right then and there. So how are you going to be able to afford this policy? Because it's not, if their thing's going to be $25 a month, we already know we're not right. And then that's when you want to discover, well, I mean, I thought it was going to be like I saw the commercial. It said it's $10 a month. No, sir, that's not how this works. And again, that's okay because
Callie, I
that's
have a,
client.
Yeah, and that's $10 per unit.
I have a question.
Unit is $1,000.
Yep. Go ahead, Felicia.
Okay, going back to what you said, that everybody is not our client, right? So how do you gracefully say to the person that you feel that you shouldn't write the policy for them? How do you come out of that? Like, what do you
So
say
give me an
to?
example. Give me an example, and let's role play it.
Okay, so pretty much like when you were saying, everybody's not your client. If they want to, they can't afford it, the policy, or they just like the other day, how the guy was, you had texted me and said he's just playing games with me, right? So how
Yeah.
do you just come out of it with like, you say, well, I don't think this will work for you, or maybe you should
I
go
don't think this will
somewhere
work for
else.
you.
I
That's a
mean,
great way
how
to
do we
say,
say
like,
it? Like,
I'm sorry, but I don't have any policies that's going to fit your budget.
okay.
Like, we don't have to say it rudely, but we need to know that we have to protect this is a business, right? And we are responsible for protecting our own business. Right. And so if you write that client, and no one, listen, I'm not telling you can't, but I'm telling you, you definitely should not. Right, because it is, at the end of the day, it's your business, right? And so you're going to be the one that deals with the circumstances of writing that type of business. But again, if somebody's saying they want a $50 policy or they want the cheapest one, they're not going to keep that policy. How are you 50 years old and then you want to spend $50 on life insurance? And your car insurance is $300 a month. It just the math doesn't make sense. How you 80 years old? I want a $25 a month policy. Sir, I can't. I'm sorry, I'm not able to help you with that. I'm not going to be able to find you a policy that's that inexpensive. Not at your age, not with your health concerns. Make sense? Akil, did you have anything else you wanted to go like?
Yeah.
I don't know if Akil mentioned this because I had a client that up running late on. But guys, you want to make sure that you're tracking your business. You got to track your business. There's on the FFL Agent Hub, there's a spreadsheet that you can track your business. Until you get to the point where you have an administrative assistant, you are everything. You are the administrative assistant. I'm fortunate because I have Zakira that can track my business. She's taking care of following up. Things fall off. She's letting me know. But until you get there, guys, you got to be your own tracker of your business. You got to know what business you write. You got to know when the payments come out. You got to know all of those things. You got to track all that information and keep it on a spreadsheet so that you can understand what's happening with your business. If we're business, guys, y'all have heard me say 100 times, business is numbers and systems. And we talk about FFL has a system. This is a part of your system. And we're tracking our numbers. Akil, okay, you said Akil said he's done. What are the questions? We're going to go for another 10 minutes. I know I said till 9:45, but again, this is important. What questions do you have, guys, about quality of business, persistency, and chargebacks?
I got a question.
Yes.
So Adina was asking, I'm not sure if I heard the answer, but if you write a policy and it is approved, but their payment doesn't go through, is that charged against us?
Yes.
The payment, okay.
Because we're talking about chargebacks and we're talking about persistency.
So we write the policy and I'm talking about just even for the initial
So
payment
that
to
first
start.
payment did not go through. It's not a chargeback, but it is a
It's
persistency issue.
a persistency issue.
Yeah.
So I guess because I used a chime card and they said it had to be tokenized. And I was like, well, what the heck is tokenized? But once I figured it out, you have to convert it to another form, I guess, to protect their identity. I had the information, but for some reason, the past couple of weeks, it hasn't gone through.
Because there ain't no money there, Sanita.
And that would be the only reason.
No, I'm just saying, like, based on what we're talking about, they probably don't have the money there. Chime is people that got a Chime account is because they have not been able to manage their money somewhere else. They got that account because there's nothing else for them. They can't get a Bank of America account. They can't get a Chase account. They can't get an account with a major bank or a credit union. That's why they have a Chime account.
Okay. Well, I mean, this is new to me because I never even had heard of a chime card.
Exactly, because you're probably managing your money. A reason I know about a Chime account because I came here to Family First Life. I was broke, and I had PNC. No one would give me a bank account but Chime. But as soon as I could get out of that Chime account, I did. What other questions do we have?
Okay, this is Deepak Kelly. I did call you on, I believe, Friday or Saturday. I had a question. Are the new agents, are they capped on receiving the commission?
All agents are capped on commission.
So how does it work? Once I did wrote an IUL, and I believe the commission was a little higher.
Deepak, can you turn your camera on?
Oh, okay. Hold on. That's good.
All right, yes, sir.
Yes. Okay. So what I was asking, I wrote an IUL very recently, and I was expecting a commission, which is supposed to be a little good. But when I see on NLG, it says the commission that is going to be transferred is 2,500.
Yes, sir.
So the rest of the money would come as earned, or okay. And how long this cap remains effective?
So we need to know. So Deepak, you got to think about that you are, and there's no shade to you, but you're a stranger, right?
No, that person that I wrote a policy
No. I'm saying you are a stranger.
Oh, okay.
Right? You're new to this business. You're a stranger to me. You're a stranger. You just got here, right? And so I need to see that you're going to be writing consistently and you're going to write good business, and then we can make a decision about increasing the cap. But I'm not going to increase the cap because you wrote one policy. Because again, if you don't pay that money back, then that rolls to David. And if David doesn't pay that money back, it rolls to me. So it's a lot of liability in this business. And so we have to minimize the liability, especially with new agents. And once we see that you are writing business on a regular basis and you're writing good business and persistency is good, then we can take a look at it. But we're not going to increase it with one policy at all.
Okay. You have a time after this call, or
let's see. I can call you. I got an interview. So as soon as I'm done with that, I can give you a call.
Perfect.
Okay.
All right.
And I meant to call you on Saturday, but it was a lot going on with church this weekend. So
My apologies. I didn't realize I called
okay.
Zakira. She told me that you're in a church, and I felt so sorry. My bad.
It's okay. I'll call you as soon as I'm done with the interview.
I have a 12 o'clock call, 12 to 1.
It'll be before that.
Okay. All right.
Yeah.
Okay.
Okay. Thank you. Good
Thank
to meet
you
you virtually.
Same here. Same here.
What other questions, guys? Now's the time.
I got a question. When, like you said, when I get up early in the morning, I check my email and I see a message from one of the carriers that I have a chargeback, how much time do I have to actually call them and settle that?
You have you got a while. That's the part. Like it's not, they don't want the money today. You
Okay.
know, you have a good amount of, it depends on the carrier, Mark. The insurance companies want to know that you have not disappeared. So what a lot of people do is they get a chargeback and they just don't acknowledge it. They don't write any more business. Here's something else. I'm sorry, Mark, that just kind of came to my mind real quick. An easy way to get your persistency up with Mutual of Omaha is to write children whole life policies. Because like I had a little bit of persistency issue with Mutual of Omaha. And so I had a client, she had 5 grandchildren. That's 5 new policies that, even though it's okay because they're children, they're going to be under $50. They're going to be way under $50. That's a different story, right? But even with her 5 grandchildren, that was $65 a month. But even though we're writing it on one policy, that's 5 separate policies. So that boosted my persistency quickly because I had 5 new policies that are on the books. And that grandma is going to keep those policies on the books for her grandchildren, right? Makes sense. So that's an easy way to get your persistency way up if you're having a persistency issue with Mutual of Omaha, right? Children whole life. Because grandparents care about their children being covered, parents care about their children being covered, and if they got multiple children or multiple grandchildren, that's a quick way to get your persistency up, guys. I'm sorry, Mark. Go ahead.
Well, the reason I'm asking, I'm trying to, like, if I get a charge back today, right? I want to catch it before it rolls to Kevin, before it rolls to you. That's why I'm asking. How much time do I have to settle that?
It depends on the carrier.
About it going to you.
It depends on the carrier. And here's another thing: the insurance carriers will take a payment plan. But it's just like if you have a credit card and you're not making a payment, they keep calling you, you ignore them. They keep emailing you, they ignore. Eventually, it's going to go to collections, right? But they're not going to do it immediately. They want to know that, hey, and even if you say, hey, I don't have a full payment, I can pay some of it. They know that you haven't ignored them, and they'll work with you. So the insurance companies, they want the money back, just like a credit card company wants the money, right? If you have a mortgage, you miss your mortgage payment, they're not going to come and take the house after you miss one mortgage. House is not going to go into foreclosure. The last thing they want to do is put your house in foreclosure. They want to work with you first, but people are just ignoring all of the calls and the emails, and not just do the carrier's email. The carrier sends out an email. In addition to everything, like she's sending out 4 and 5 messages saying, hey, now I need you to mute. She's sending out 4 and 5 different emails saying, hey, you have this chargeback, you have this debt, please take care of it. So there's no reason, guys, that when you have you're gonna know, Mark, when it's outstanding. And Mutual Omaha is going to say, Mutual Omaha is going to say 5th notice. If you do not pay this back, and the one thing I did not talk about real quickly is that if you leave these chargebacks, these insurance carriers will vector you. And you do not want a vector. Vector will put you out of business. You get a vector with Americo, Mutual Omaha is going to say, hey, we see you got a vector. Or you get a vector with another company, Mutual Omaha is going to see that vector, and Mutual Omaha is going to say, we're not messing with you. If you don't take care of this, we're going to put you on ASERN. Other companies going to say, hey, you got a vector, we're going to terminate you. So this is serious business, guys, with your debt, with these chargebacks, like the persistency, like it is important. And then here's another thing too, Mark. If you have a chargeback and you get terminated for persistency, you're going to get a vector. Like we have to manage our business. We got to play offense. That's what I'm looking for. We got to play offense so that we don't eventually have to play defense. A lot of us are playing defense with our business. Let's play offense and manage our business up front so that we don't have to later try to come up with all this money on the back end, right? But again, the key to having good business and not being in these situations that we're talking about, being desperate, is being consistent. Because you got to write business consistently. And because if you're writing a policy here and there, Felicia, and I'm not picking on you at all, but you're writing a policy here and there, and then you get a chargeback, that $3,000 chargeback or that $1,500 chargeback is going to seem crazy. But if you're consistently writing business, it's not going to be that bad. So that's all I got, guys. Everybody has my number. So if you have any other questions about this, you can definitely reach out to me directly, or you can reach out to Akil. Akil, like I said, Akil is a beast.